Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Chuck Self. He's the Chief Investment Officer over iSectors, and we're going to focus on income funds. And Chuck, the question is, why is now the time for investors to look at income funds?
Well, we have more and more investors that are in a distribution phase of their lives, and whether it's for college savings or retirement savings, they need to have a set amount of income to be able to cover those expenses. And even though interest rates are up, on whether it's the short end or the long end, it's still not high enough to be able to cover many people's income needs. So we've gotten more and more, financial advisors are our clients, and we get more and more people asking us what can we do to get higher income.
What are some of the problems and challenges with income funds?
Well, the major problem is that most of them are very highly correlated with the equity market. We did a survey of income strategies that are out there, and they're usually about 40% high dividend funds and 35% high yield funds. Well, high yield bonds, of course, are more correlated with equities than fixed income. Now, if you believe the stock market's going to go up the next 10 years like it has for the last 10 years, then okay, that's perfectly fine. But we don't believe that, and so we feel that you have to have a much more diversified solution than the income strategies that are out
So
there.
what are you doing at iSectors to mitigate the problems with the correlation between bonds and equities?
Well, again, we're going to have both equities and fixed income strategies in our strategy, but we make sure that each security has relatively low correlation to each other security and also low correlation with the equity and fixed income markets. So you can have true diversification and yet get high yield. Our strategy has a 5.25% yield, and so but yet by having true diversification, if one part of the market goes wrong, it's not going to bring down the whole portfolio.
What are some examples of ETFs within the iSector strategy?
Well, one of the examples is actually not an ETF, but it's a Nasdaq-listed stock, Monroe Capital Corp, MRCC. This is a business development corp, BDC, that lends money to low, middle type of businesses. This part of the market has not been served well because the regional banks have gone to hire customers, and the community banks and credit unions don't have enough capital to be able to serve these customers. So they've come in and they're able to lend to these companies, get equity kickers,
right,
and then have a 10% type yield on the security. But in the ETF side, one of our favorites is the Global X MLP fund, MLPA, and they have a fund of MLPs. It used to be that if you had one MLP, you had them all.
Right.
But now, there's changes in structure going on. There's changes in whether you're in Permian or Bakke or wherever you are, Marcellus, and you need to have a diversification in MLP funds, and MLPA allows you to have that as a yield of over 6%, and we think it's attractive.
All right. Well, thank you very much for joining us at MarketSite as always. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.